So you wanna go to war with me? You're talking like you think you're royalty. You think that I'm afraid, but I don't break. I heard you question my stability. You think I'll fall just like a guillotine, but I am here to stay. Won't look away. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the. I'm coming for the throne. I'm coming for the throne. So you wanna be my enemy? You should've known I'd never kiss the rain. Ice runs in my veins, won't play it safe. I don't belong with your nobility. Who died and made you king of anything? You think that I'm insane? It's your mistake. Kingdoms rise and fall, I've come to take it all. I'll take it, I've come to take it. Kingdoms rise and fall, I've come to take it all. I'll take it all. The storm is coming, so you better start running. No, you can't control, feel it in my bones. I'm coming for the, coming for the. I'm coming for the throne.
Coming for your throne.
I'm coming for the throne.
Let's go. Yo, I'm like an addict, do I gotta have it. I ain't even playing, got a really bad habit. If it moves, gotta grab it, fuse like a magnet. Lose, won't have it till I'm doomed in a casket. I ain't playing, got a weird mind. If you work 8 hours, I'ma work 9. If the shit tastes sour, you should taste mine. I'ma stay in power for a long time. Get up, nah, I ain't a quitter. Toss me the ball, I'm a really big hitter. Big picture, I'm a straight killer. Rising the song to the highest bidder. Got juice, got gas, I'ma move fast. New shoes, new tracks, like who's that? I'm new, come back, better than last. Yeah, it's a new me, never gonna look back. Never gonna look back. Cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change. Slowly take a step today. I will never be the same, cause that's what it takes. Pushing till look back, cause damn, I was built to last. You move slow and I move fast, and that's facts. Only I can make a change, slowly take a step today. I will never be the same, cause that's what it takes.
All right, y'all. Happy Saturday, August 2nd. Welcome to the show. The wife is babysitting for a couple hours, so we're good here, probably till at least, 10:30 Central. As long as you guys have questions and I have something to talk about, we're just going to hang out here, have a drink of your choice. Mine, again, still is water. And light up, smoke them if you got them. Tito, what's going on? Tito says he wants to get into copper. David wants to talk about open tonight. I have open the ticker short interest up on the screen here. That looks pretty interesting. David, still at 22.5%. You know, I love talking about short squeezes if the short interest is over 20%. This does meet the criteria. Congratulations. We can talk about that one to your liking, because you want me to talk about a potential short squeeze. It met the first hurdle, over 20% short interest. That's just a channel rule of mine to kind of filter out what we talk about as a short squeeze. It doesn't mean that stocks with lower short interest can't short squeeze. They can, of course, but we got to have some rules, so that is the one that I chose. Let's look at the chart here for open real quick. This is the weekly. We have a run up from 50 cents up to $5 in 2 weeks now of red candles. This little pattern formation here, Super Steven once told me that he likes to call that the needle of death. So I have adopted that phraseology. I like that. Needle of death. There might have been a short squeeze on this way up and people forced to buy in all the way up to $5. But then that buying pressure kind of went away and you get 2 weeks of going in the red. But, you know, that's my initial reaction. I haven't looked at this chart in a week or two. Let's go to the daily and see if we can see anything different here. Pretty much seeing the same thing. You know, I will tell you, from having looked at a bunch of these, I am the number 2 ranked global short squeeze specialist. Number 1 is in jail somewhere in Canada, not related to any financial crimes. That's a story for another day. But based on what I'm seeing here and what I've seen in the past on other tickers, they can, from time to time, have a secondary bounce, although it is more rare that they bounce higher than the first open. It looks like it still has. We should check Ortex, really. How old is this data? 7:15. We're already on 8:2. Well, typically what I would tell you if you were in my Discord is look for a retest down here off of the 200. That would be around $1.30. But, you know, there's no guarantees that it will get that low. A lot of times they bounce before then, and we see 3 days of consolidation right here at $2. next week is a new week. I don't know if I will be trading open, but it's definitely one I'd say to have on the watch list in case it regains volume and momentum. Let me put the volume up here. All right, so there is our volume. RSI is mid at 58. All right. Yeah. I mean, it still has potential, David. I'm not gonna shit on the possibility. It is too difficult for me to say what is going to happen, but as long as you're managing your risk and you've got carefully laid out risk to reward plan and a trading plan around exits if it doesn't go the way that you want, then I say knock yourself out. Tito says copper. Yeah, there was some news last week about Trump changing some copper tariffs, and copper tanked for a little bit, and then it rallied back up, I think, once, if I recall correctly. I don't follow copper closely, but I did briefly look at it. It came back up, right? Once the market kind of understood what his tariffs were actually impacting. David says earnings is on Tuesday. They might go positive EBITDA. Okay. All right. That's some good extra info, David. Let me, I have not looked at the financials recently. Let's just look at a couple things here real quick. Definitely, if it's on the verge, if there is high short interest and you get good news, hey, that's the catalyst that you needed. And maybe that will be the case. I don't know enough about Open Door to say if they will have positive EBITDA or positive earnings, but let's just take a quick look. My first time looking at this in a week or two, and I don't know it well enough to tell you anything by recall. So revenue quarterly down from 2021, but holding relatively flat for the last 2 years. Operating income it's mostly been negative except for one little blip in 2021. That's probably why it's being shorted. I'm sure if we make our way down to net income, it's not any better. Yep. Net income, negativo. There has been some dilution over the last several years, but not look, the big dilution happened in 2020, and for whatever reason I can't tell you just by looking at this. I'd need to go dig into some filings why it's slowly going up. Are they slowly diluting? Is it warrants? Is it convertible debt? Is it executive compensation? I don't know without digging a little deeper. But I'm just noting here that the share count has increased. Earnings per share, not horrible, negative 12 cents. Wouldn't take much to flip that into the positive, which is what you're hoping for, right? I guess my big question would be, what's changing the revenue or net income story for Open Door going into the earnings? What has fundamentally changed in their business or in the industry that has you excited about the potential of a positive net income? I don't know what's going to happen. I'm just asking you the question, so you know more about it than I do for sure. Cash, $693 million. Total assets, $3.2 million. Total liabilities, $2.6. That's good. Good balance sheet. Working capital, they are at $1053 on current liabilities. And current assets, they are at $3152. Yeah, balance sheet is fairly solid, just at the first high level pass things that we look at. And the other thing that I would look at real quick, these are just little things that you guys should go if you want to do a 30, 60-second look to decide if you need to look deeper. Go look at their operating cash flow and then compare that to the trend of operating cash flow and how much cash they have left on the balance sheet. So I'm seeing negative 279. there's a big bucket here. Other, we'd need to go look at a 10Q. I can't tell you what that is, but anytime you see weird large buckets, you need to go look in the 10Q. Make sure you understand that. Operating cash flow negative means that they're probably going to either need to sell some debt or sell some shares. And I see debt issued here. So debt issued, debt paid, debt issued. That's not horrible if they can fix their net income issue. Forecast from analysts, $1.70, and they have it marked as a hold. What are analysts expecting this quarter? 1.53 billion, negative 2 pennies. Well, hopefully you get a beat, David, and you get a short squeeze. Sparky, what's up? If you want to join in, let me know. If any of y'all want to join in and say hello, ask a question, I'm going to put the invite link in the chat. And let me figure out copy invite link. Spencer G, how you doing? Make sure you have a phone or a camera if you're going to utilize that invite link. Make sure you know how to behave like an adult. We enjoy having different opinions on this channel. We don't enjoy people that act like children. Tito says American copper should pop or rise next quarter. Buy target 35-ish. Spencer G, what's on your mind tonight? Let me see if I can get this little, I'm testing out a little scrolling ticker on the bottom here. Oh, look at that. Look at that. What's your favorite trade for next week? While we're waiting on a few more people to come in here, let's talk about some movies. My favorite topic. I saw a couple movies this week. I got a funny story to tell y'all. People on X did not find it that funny. I thought it was pretty hilarious. Go figure. I got a weird sense of humor, I guess. I saw where. Oh, wow. I was like, where's the new movies? Oh, let me go to daily. Let me go to daily. 38 million on Friday. Sparky says driving, so have to listen. All right. This week, Scarlett and I saw the movie together. It's number 6 right now. It did 2.2 million on Friday. I think we saw it on Thursday. This is what I call a romance horror. It's a couples movie, but it takes a sick and twisted turn pretty quickly into the movie, into the horror adjacent realm. And there were a couple moments in that movie where she and our wife and I both were squeamish, like, oh my God, what are we watching here? What the heck is going on? But when she saw that movie poster a month ago and their lips were like stuck together, that's what they mean by together. Their bodies like want to merge into one. I don't want to ruin the movie for you, but if you've seen the poster, you know what I'm talking about. She's like, see, babe, that's what I always tell you. I just want to be one with you. Like, we got to go see this movie. I'm like, you are weird, lady. I'm just teasing, but she does say stuff like that. So she was excited to go see this movie, and we enjoyed it. It's kind of out there. You know, not my favorite horror movie, but it was good enough. And then yesterday I saw, I think it was yesterday, The Naked Gun. I went by myself. I don't even know if my wife, you know, she's barely old enough, probably doesn't know what the first Naked Gun was. Maybe I'll take her again to go see this one, but I went to an early show. It was like 1:30 in the afternoon on Thursday or Friday, whatever day it was. Friday. It was Friday. We went to go see together on Thursday, and I went to see The Naked Gun on Friday. 1:30. The movie was almost empty, the theater, because, you know, it's early on a weekday. People aren't out going to see movies that early. Rows A, empty. B, empty. This is my funny story. I thought it was funny. Row C was empty. I booked D8, which was almost at the very end of row D, because I don't want to be, if I'm going to the movie when it's relatively empty, I don't want to be sitting right up on someone. I know I could book the middle seat, and there's probably going to be someone next to me in row D, E, F, G, H. So I booked D8 almost at the end. Nobody. I booked it 15, 20 minutes before the movie started, maybe 30 minutes. Nobody in that row. Row E had some people, F, G. As you go further up, the more primo seats. I walked in, I ordered my food to be delivered to my seat. What did I? Oh, I ordered a shake. Don't hate. I know it's not carnivore, but some days you got to live a little. Waiting for my shake, go to my seat. Son of a bitch, if there is not a jolly old man sitting in D7. My seat was D8, towards the end of row D. This motherfucker's in D7. And I couldn't do it. I mean, people on Twitter, they're like, oh, Tony, we go to movies to be around other people. I do too. But when I'm booking a seat in a virtually empty theater, I don't expect to show up and the one seat that's taken is the one right next to me. And I booked mine when that row was empty. And he knew when he booked that seat, whether he bought it in the kiosk or booked it online, he knew he was booking it next to someone. What the fuck, man? That's like walking up to the urinal next to somebody. That's like saying, I want to sit in the middle seat in coach. Nobody does that. Nobody does that. Come on, you guys on Twitter. Are you really going to give me a hard time because I was not happy that someone was, right next to me in a virtually empty auditorium? I had to sit there and listen to him. He thought every line of The Naked Gun was the funniest thing that he's ever heard. Busting out laughing. He was jiggling. He was a big guy. Jiggling and laughing out loud. You know that friend of yours that laughs really overly loud? That was this guy. And I had to sit there almost like buddy. Our shoulders were rubbing. And finally my shake came. Like 10 or 15 minutes in. I was like, I didn't say anything. I just got up and I moved to D2 or D1. I forget which one. No. Come on, guys. Don't book the seat next to somebody on an empty row at the end of the row. He could have booked in the middle. He booked at the end. Anyways, he enjoyed the fuck out of that movie. Let me tell you what. And I enjoyed his laughter from afar. I don't need somebody for 2 hours right up on my shoulder on a Friday afternoon, unless it's my wife. The movie was good. Naked Gun was good. I would go see it again. So many jokes. You probably got to watch it 2 or 3 times to take it all in, just like the first movie. Douglas, yeah, we can talk about the Fed. And let's see. Spencer says if you could take a peek at APLD. All right. And I'm going to read a couple of other comments here, and then we'll get to your thoughts. Keith says, wish I could have bought GME around 12. Yeah, I fucked up, Keith. I did not buy it when it was at $10, and then it moved up so fast I had to chase it. Which happens sometimes. That's all right. I'm just swing trading it, so it would have been nice. I would have sold into the next move up. Anyways, it would have been nice to get those couple extra dollars if I would have bought it at $9.95 or whatever it got to, 10, 11, 12. I paid a little more than that. But then it ran up to 60. And I had bought in, I think, in the 20s. It's probably on my GME chart if I pull it up. Yeah, it would have been nice to make an extra $10 or $20 a share, but I still got a good trade on that one. And I'm long at the moment. Someone was bitching at me on Twitter today. Why are you even talking about GameStop? You hate GameStop and you hate AMC. Like, Come on, guys. I don't hate GameStop. I love volatile stocks. GameStop's done a fantastic job of improving their balance sheet. I don't know how many times I've got to say I'm excited to see what Ryan Cohen does with the cash, and that will fundamentally, hopefully, change the valuation of GameStop stock. Like, how much more positive do you want me to be? I'm long the stock. I like Ryan Cohen. He's done a great job. You still got to deal with declining revenues, and you got to improve profitability. That does not mean that I hate GameStop. Stop with the nonsense. And then the people, oh, you hate AMC too. You you don't miss a chance to spread FUD on AMC. Look, I'm a A-list member. I go to probably more movies than most of y'all, 2 or 3 a week. Spend a lot of money on concessions. I don't know what. I'm reading the financial statements. I'm reading the company's information to you because a lot of y'all don't want to read it, or you create alternate realities. Like the people I was talking to today about, a dividend is imminent. No, it's not. There's no imminent dividend. The company literally just signed a new debt deal 30 days ago that excludes dividends as part of a debt covenant. Why? Because the balance sheet is insolvent. The assets are less than the liabilities. The lenders are not going to allow AMC to waste cash on a dividend when cash is critical right now. Just keeping it on the balance sheet to sustain operations. They're not going to let AMC pay a dividend. That is not going to happen. Quit talking about it. You're fudding people with misinformation so that they get upset when it doesn't happen. Let's talk about the things that are important. Improving the balance sheet, paying down debt, profitability. These are important things. Go see some fucking movies. Go buy some concessions. You can buy the stock too. Do it all. But quit fudding people with dividend talk when literally 30 days ago, the company said in their debt deal, go read the documents, that there are covenants preventing dividends. This is a new 5-year debt deal. I don't know what to tell you. Let's have the conversation again when the next debt refinancing happens. Probably not going to be for another year or two. Talking about it now like it's imminent, and these guys are using the word. It's right around the corner. It's imminent. No, it's not. And that's not me being negative. That is just reality. I want you to have your head screwed on straight. I want you to, if you decide to be in the trade, have the proper expectations. There's nothing wrong with that. That's not negative. It is called being logical, emotionless, and knowingly making a decision based on facts, not on hopes, dreams, wishes, fantasy, or even worse, misinformation. Keith said, did your buddy in D7 try and share popcorn? No, he did not. I don't remember if he had any treats of his own, any popcorn. Sparky says there is, Tito bought at 12 and sold at 14.50. Ouch. That hurts, Tito. Sparky says there is a YouTube chatter about a market maker exemption that is going away 8/28. I haven't been watching really anybody else on YouTube. I did see somebody summarize something on X with some bullet points that talked about something changing at the end of August. I mean, Sparky, I've been listening to people talk about regulation changes for 4 years now. Ain't one of them made a damn bit of difference. I will look into it further this weekend, but ain't none of them made a damn bit of difference. I don't know why I should get excited about this one, but maybe I should. You guys point me in the right direction. I'll go read up on it. Tell me who's talking about it with the real talk, Sparky. They got the deets. They got the details. I'm not so focused on what any regulatory agency can do for me. Ain't none of them done a damn thing. Ain't none of them done a damn thing. What do I have control over? Looking at financial statements, understanding a company's situation, understanding why shorts might be targeting it, understanding if there's any dilution coming up. And then I'm assuming we're talking about speculative plays, right? Profitable companies, whole different bucket. We're talking about the retail stocks. Once I understand everything and have my facts straight and know what's coming, and I'm not listening to nonsense or made up things like a dividend is around the corner, then I can try and get the best timing for an entry. I will never tell you don't try and swing trade these stocks. You do whatever you want. I do it all the time. But I make people mad, I guess, because profit, protecting my portfolio balance is a key driver for me. If that's not a key driver for you, hey, you do your own thing. Start your own YouTube channel. Tell us all about it. Keep us posted. John says, I have 7,900 shares. I'm expecting GME to do very well going forward, but there will be further dilution. John, congrats on the almost 8,000 shares, way more than I got, friend. I also am expecting GME to do very well going forward, even if the revenue declines. I bring it up only because it's annoying, but hopefully in the next, I don't know what, 1, 2, 3, 4 quarters, we get some messaging that things are going to flatten out on revenue. It's just one talking point that I'd like to put behind us. Maybe we get to a point where we talk about increasing revenues if the collectibles and trading card stuff continues to grow. That'd be cool with me too. But as far as things getting better going forward, GameStop's gotten rid of all the unprofitable locations, as far as I know, according to what they tell me, what they tell us, and that we should expect profits operationally going forward. I like that guidance. I heard that correct, right? You guys heard them say that too? That operational profitability is expected going forward. I don't know if they said quarter by quarter, or if they meant annually, but does it matter? Not too much. Not too much. I tend to look at profitability on an annual basis, but it's fine to look at it quarterly too. There might be some negative quarters, some break-even quarters, some positive quarters. GameStop's got that 4.5% interest, 4%, whatever it is, which also helps soften any edges. If there was an operating loss, it's probably not going to be big enough to be negative because of the money they're bringing in off of the interest on their cash. So I am also expecting it to get better, and I'm hoping that this will be a game changer Q2 for them. And my plan is maybe tomorrow, maybe one day during this week, to kind of really just sit down, clear my mind, have a cup of coffee, and see if this might be the very first quarter that I decide to put out a GameStop quarterly prediction. It's so hard. It's so hard when the revenue's declining and the company is pulling all the levers in the background to reduce SG&A. They're closing stores. You got one-time expenses. Trading cards are growing. How do I forecast all of those moving parts with accuracy? It's very tough. It's very tough. Maybe I'll do that this time around, or maybe I'll just have my hat in the ring long on GameStop and hope for a good result. I don't know. But I am going to do the work to try and come up with some meaningful numbers for Q2, thinking about the Switch 2 and trading cards. And, if I have something that I think might be useful with you guys, I will share it, but I'm not promising anything right now. I'd love to see a Q2 beat. And I really am serious. I'm looking forward to the day and I have no pressure, Ryan Cohen. I'm not one of those guys complaining. I'm not one of those guys pressuring him. I would like to hear some news one day about investment of that cash. Change the ROA, change the ROE, change the ROIC, improve the earnings through a wise investment. Ryan gets all this. We heard him talk 2 weeks ago. He knows exactly what he needs to do. I have full faith in him. I'm not one of those bears out there, the meltdowners that think he's a horrible CEO. I do not think that. It's just some people, some of y'all, have a time frame that he's not working on. He's working on his time frame. And so quit buying weekly options would be my until you see some momentum driving the price up, big spikes. Or there are those of us, I've even done it myself. I've talked about it with my folks in my Discord. Should we be looking at call options a couple months out with this low volatility situation? Maybe. I mean, if you really like extreme gambling, I wouldn't be buying them a week out. I'd be adding several months so I don't get theta burned in the first 2 weeks, and then cross your fingers. But what's really the catalyst? What's going to kick this thing off? That's what you got to have an answer to that. And you got to have a answer that you're willing to put money behind. I don't have that answer. I'm just watching the chart kind of melt down here. I would love to see it hit this demand zone down here. I'm in at 2161. There's my buys. I'm in at 2161. So if I can pick some up below that, cool. I think there is a floor based on having all the cash, a floor that is higher than fair value. Fair value being, I don't know what, 15, 16, 18, whatever you want to say. It's not 50 like people try and tell you. Let's just say it's 18, 19. It doesn't matter. It's just understanding relativity of fair value, understanding how to separate yourself from the hype and the misinformation being pushed by pumpers on YouTube about the how to value a stock. They don't look at profitability. They don't even look at it. If they do, they pick the most ridiculous comparisons like Amazon or Apple. Like, bro, it's a retail store. Best Buy. Compare your ROA, ROE, ROIC to Best Buy. Compare your EPS to Best Buy. Until the company has a different announced strategy, that is your competitors. That is who you should be comparing it to. Everything else these YouTubers are doing is a fucking distraction. It's as bad as the people that used to talk about Bed Bath & Beyond. It's just misinformation. Daily 5-hour misinformation from GameStop YouTubers that will not talk about profitability ratios with you guys. They want to talk about solvency ratios, liquidity ratios. Yeah, because those are good, but those are just a foundation. They do not drive the price that you see on your chart. Profits do. Profits. Price is derived from earnings. PE ratio. Chris says, have you put out your thoughts about AMC earnings? Yes, I did on July 1st or 2nd. That video has been out there for a month. It's a very tough quarter to call, Q2. I said in my video, I'm not expecting profits for Q2. It's literally impossible for me to tell you with any certainty that it will be a profitable quarter. So I'm not doing that. I'd be happy with break even. I'd be ecstatic if it is somehow profitable, but there is also a scenario where it's not profitable. It's going to depend on their capture of market share in Q2, and it's going to depend on their food and beverage. And how am I supposed to guess market share? So I'll pop a champagne with you if there's a magical beat and some great profits. And if there's not, my call is break even. We should be happy with break even. And I was surprised that some of the analysts came out and said profitable quarter, but that's good news. I'd love to see that for AMC Q2. I'd love to see positive net income. I'd love to see positive operating cash flow. I'd even love to see positive free cash flow, but I don't know. Dangerous times to be making predictions on AMC. What I can tell you, Q4 looks good. Q3, kind of August and September, I don't think are going to be fun. July was a blast. Chris says, I'm long shares, but I have some 250 puts with expiration in September. 250 puts. I've got the AMC chart here. And demand zone 270 to 280. We're about to retest it. If the market were to crater, I think having those puts as a massive downside hedge is probably okay. I'm not calling for it to get around 250. But if you want some downside insurance, those were probably cheap, pretty cheap insurance just in case the worst happens. But how bad's it going to get? We're not going to even see a proxy till October. So I'm just kind of sitting it out and waiting to see the proxy. That's my plan with AMC. And, if the price really goes down, the further down it goes, the more I might seriously look at it. But I'm not trying to fish for bottom entry when I got the specter of a proxy with a reverse split or more shares doubling the flow. I don't know what it's going to be. I'm being very cautious. I'm old, guys. I don't got 40 years for things to recover if I'm wrong. So I can be patient. August, September. I only got to wait 2 more months, and then I will have some final answers. I'll know how Q3 is shaping up, and I will know what's on the proxy. That's like literally the last things on my risk management list for AMC. And a lot of y'all don't care about those risks, and that is fine with me. I'm not trying to talk you out of your trades. You do whatever you want. I'm talking about what I'm looking at. And there's no guarantee that my being a worrywart is the right play. Just trying to protect my capital, and maybe I'll get lucky with a prime entry. Maybe I won't. I can always buy into run-ups. I'm fine. If the news flips really good, I'm happy to buy into run-ups. Happy. And you need my capital. You need all of us that are sitting on the sideline. You need us to come in at a certain point. And I'm not the only one sitting on the sidelines. I can guarantee you that, because I talk to people every day that are sitting on the sidelines, waiting. Not hating, just waiting. That should be a slogan. We're not hating. We're just waiting. And remember, they're telling you that it's going to $1 million a share on the MOAS because of trillions of synthetics. FBI, DOJ, SEC, where you at? Trillions of synthetics. Look, if that's the case, all you need is one share. Just buy one for a couple bucks here and be patient. Right? That's what they tell you. He says that's why we need rate cuts. Yeah. So when's our next Fed meeting, Keith? September? Is the Fed likely to cut rates in September? Let's talk about that. I say yes. Mediocre asked me a week or so ago, Tony, is the Fed going to cut rates? I said no. That was for the one we just had. I'm going to say odds are looking good for a rate cut in September. What do you guys think? Do you think the Fed is going to cut rates? Or are they going to keep stringing us along? Punishing Trump. Jerome Powell playing the bad guy with his, what's he building? He's building a new $2.5 billion castle over there, the new Fed building. Gilded walls, marble floors. Trump can't say anything. Have you seen his penthouse? He probably walked over to that Fed meeting. He's like, that Fed building, looked at the plans. He's like, I'd do the same thing. Blazin, what's up, amigo? He says, I think pausing is the right choice for as long as possible. Unless we see weaker job numbers, the risk is on the inflation side. Will a rate cut hurt or help GME? John, I know just like offhand, it would help AMC because they have adjustable rates tied to the SOFR. But I don't know that it makes any difference for GameStop. Their convertible notes are 0%. That might be a Sparky question. Sparky, when you got 0% convertibles out there, I know that the yields out there on treasuries affect companies' ability to raise capital, but GameStop's already sold its convertible notes. How does changing interest rate affect the convertible bond holders' analysis of holding GameStop bonds or trading them? I don't know enough about bonds, or I don't remember enough. Tell you, I'm studying for the Series 65, all of these are exact type of questions that are on the damn test. And one day I'll get them memorized. Keep on asking the questions. One day I'll have it memorized, but I'm not a career bond trader, and this stuff still is not cemented properly in my brain. Sparky says no cuts maybe this year unless the economy really falls. That's housing and jobs leading. I do think the Fed is holding its political power for now. No cut. All right. Sparky is on the record for saying no cut. I'm saying yes for cut. I don't know. Douglas says, will more Fed officials resign in the next 6 weeks? Did somebody resign? Did I miss an announcement? I've had my damn head buried in reading filings and doing DD on companies. I've barely been paying attention to the Fed, although I did watch Jerry P's talk. I was going to live stream it with you guys, but I sat down to my desk from lunch a little bit late, and I didn't want to start the live stream 5-10 minutes into his talk. Keith says, come on, Sparky, cut it. Cut those rates. Let's put the chat up on the screen here. Nobody wants to come be live on camera with us, huh? That's fine. Kugler on Friday. All right. Let me pull that up here. One day ago. Yeah. Adriana Kugler. Let's put me down in the corner here. Bah. Come on. Adriana Kugler submits resignation as a member of the Fed effective August 8th. Wow. Only what happened to 2 weeks notice? She will step down her position, giving Trump a chance to appoint somebody, I guess. She has served since September 2023. Will return to Georgetown University as a professor this fall. The text of the letter is attached. It has been an honor to serve the Board of Governors of the Fed, especially during this critical time. Jerome Powell gives her accolades. Well, that's news to me. Thank you for letting me know. And I don't know. I don't know if other people are going to resign or not. I hope not. I don't want to see a mass resignation. But what do y'all think? Would you like to see Trump load up the Fed with a bunch of his picks? Trump alleged without proof that Kugler resigned over a disagreement with Powell on rates. Well, well, well. The story just got more interesting, Sparky. Brandon says, how do I go live with you? I'll put the link in the video description again. If you want to come on the live and you haven't been on here before, just get your phone out or a camera and a mic and be able to converse like an adult. Michael Anthony, what's going on? Hog dipped to $21. Michael also says fundamentals mean everything now and good dividends. Are we talking about AMC, Michael? Douglas looks like he's not happy about a takeover of the Fed. Could mean a major repricing downward. I do agree with you, Michael. Trump is sick of Chairman Powell. So is Bill Pulte, apparently. Not a fan of Chairman Powell. Speaking of Bill Pulte and folks on social media, did y'all hear that our friend Kevin Malone is having a space call? Shout out to my good friend Kevin Malone. There is a space call with him, Wes Christian. I say good friend. He's been really mean to me on social media. I don't know why, but he's having, I just want y'all to be aware, he's having a space call on Monday, I think at 6 p.m. with Wes Christian and the CEO of Quantum Biopharma. Be sure and check that one out. I sure will. Always like to hear what CEOs are doing to attack naked shorts. Maybe one day one of them will get something done. A lot of things been tried. A lot of things have been tried. Not really anything has worked just yet, but we always hope. We always hope. Let's see what else is going on this weekend. Oh, I had family in town this week. Sorry if I haven't been around. We went out to my uncle's place out in the oil country earlier this week. I went down to my aunt's house today with the wife. Had some good Italian food. She lives south of Austin. Man, the freaking construction, highway construction here, expansion is pushing further and further out into the country. It's been a while since I've been out that way. Good visit with family. Good food. Good to catch up with everybody. And what else is going on this week? Oh, we talked about Railtown a little bit. Hopefully y'all got to check out that video. I don't talk with y'all about OTC stocks much. Y'all ask me about penny stocks all the time. Usually we don't talk about them on this channel. Doesn't mean don't trade them. Do whatever you want. But because of the high risk and the amount of people looking for someone else to blame for their decisions, I had to make the tough call not to talk about penny stocks unless I put a buttload of disclosures out there. And if you're in my Discord, you know what I mean. Anytime I talk about a penny stock, I put speculative, exclamation point, hashtag. Nothing in penny stock world is a slam dunk or a sure thing. Doesn't mean we don't play them, but you got to be a big boy. Pull up your panties. Some of y'all not big boys. You're wearing them pink panties. You want to cry every time something doesn't go your way. No, do your DD, make your decision, and then own it. Own your choices. No complaining if it doesn't work out. And we always hope it does work out. I want to see all of them work out. I want to see y'all make money. And I want to see you happy. Cyan Ape, what's going on? He says AMC is for sure thing. I'm not sure what that means. How come I can't see him in my YouTube chat, but I see him in the restream chat. Well, anyways, welcome. AMC will go higher. I think it probably will. I'm thinking closer to Q4. You know, I'm looking at the calendar of movies for August and September. It's not overwhelmingly, you know, I can't go shout from the rooftops about August and September, but I can say Q4 looks really, really good. I'm excited about that. And I think we'll see kind of, if there is kind of this doldrums over the next 60 days, I think we'll see that story start changing as we get closer to Q4. That's my hope. If we don't have doldrums, great. But I'm expecting a bit of a slowdown for the rest of this quarter. Somewhere just shy of profitability for AMC. You could do your part by going to see some movies, get A-listed, and buy some popcorn, buy some Cokes. That's about all I can do at this point. That is what I do. That's what I do. But I like movies, if you didn't know. Don't hate. Don't hate. Don't hate if you don't like movies. If you prefer Netflix or playing Call of Duty, that's cool with me. You do you. And a lot of us that like movies out here. I was just, I was thinking back to the early days when I was in college. When you remember, I mean, some of y'all might be struggling with this now, but there were those days where you're like, what's at the discount theater today? Because all I got's $1. What's at the dollar theater? I'll spring for that $3 popcorn. It's some nasty shit. Yeah, we all went through those days at some point. And now I sit back in the lounge chairs in our AMC dine-in theater. Looks like a damn Las Vegas casino. There's a bar behind me. Got sports, flat screen TVs, big old 60, 70-foot ceilings with Las Vegas lighting up there. I'm like, man, times have changed. No more dollar theaters. But the AMC A-list does make it easy. I don't, what do they charge me? Like $20 a month? I get to see 4 movies a week for free. Come on. Doesn't get any better than that if you like movies. No. I know what you're saying. AMC's got to be paying him. I wish somebody would pay me. I just like movies. I don't own an AMC right now. Maybe in October when I see the proxy, I'll change my mind. I own Dolby and Cinemark. Last year I owned IMAX and Marcus Corp. But if I'm going to go to a theater, I'm going to go to one where every dollar counts right now. That's AMC. Plus, they have some of the nicest theaters around here, especially the dine-in theater. We tried one time. We tried the Primo, like the place. I forget what it's called, but it's super expensive food, super expensive ticket prices. They have full recliners. Everybody's got a blanket, a blankie and a pillow waiting for them when you walk in. And we ordered our food and they didn't freaking bring it till like the movie was over. I'm like, what is your problem? And then the manager wanted to argue with me because I wanted a refund for my food. I was like, your fucking waiter brought it at the end of the movie. We're paying top dollar to be here at my wife's request. And you fuck it up like this? No, I'm not paying for that. Never had that problem with AMC. It's always coming right, 10, 15 minutes after you order, bringing it right to your seat. So looking here at the movies, though, for this weekend, Friday was a little slow. Hopefully we get a little uptick on Saturday and Sunday. That's why I told y'all Naked Gun is pretty funny. Go see it. Together, good date movie. There is a horror aspect to it. Bad Guys 2, that's for families with kids, not my current situation. My kids are grown. So I don't know if we will go see the Bad Guys 2. I did not see the Bad Guys 1. I'm looking forward to seeing F1 later this month. I think it comes back out in IMAX, or maybe that's in September. I saw it in Dolby. I want to see it in IMAX when they re-release it. And if I had to pick another movie to see again, maybe Superman. I've seen just about everything else. I have not seen Smurfs. Don't plan to, really. It'd have to be a really, really slow day for me to get up and drive somewhere to go watch Smurfs. Sparky says, Cinemark will be good to look at again after the 8/15 bonds come due. Fascinating story for you guys to watch along with myself and Sparky. Cinemark's 5-year bonds are maturing on August 15th. That is 13 days away. Their short interest has been over 20% due to the bond hedging. Same things I've been talking to you guys about with AMC convertibles and GameStop convertibles. Cinemark bonds are trading at twice the conversion price, roughly. The bonds are trading at twice par, roughly. No conversions. 0 conversions. The GameStop people are telling you, oh boy, those bondholders can't wait for it to hit that conversion price. They're going to convert immediately because they want to own GameStop. Nope, not going to work that way. Just not. They make more money holding the bonds. They've got optionality all the way to maturity that is worth more than converting to shares. Unless price were to moon on GameStop, then they might convert and lock in outsized profits. Yes. But if it's just trading at $29, $30, $32, I expect 0 conversions on GameStop. And Cinemark is a good thing to go look at to see exactly what we're talking about here. Trading at 2x the conversion price, 2x par, 0 conversions. We're 13 days away. It's been 5 years, 0 conversions, 2 weeks away. And what I want you guys to pay attention to over the next 30 days is what happens to their short interest as they unwind that convertible hedge, that short position. Cinemark telling us that they plan to pay the principal with cash and anything that they owe on top of that with shares. So it'll be some of their cash and some shares going to take care of retiring these convertible bonds. I see somebody beeped in the back room here. Is it back room Ryan Cohen? What did the PP show? Who did he have? Back room Brian Cohen. Let's see who we got here. Brandon. Let me get Brandon on the screen here. Let me turn off this so we can see you. How you doing, amigo? Can you hear me, Brandon?
My connection is breaking up a bit. Can you hear me?
The picture's a little fuzzy, but we can hear you just fine. How you doing tonight?
I'm well, brother. How are you?
What's on your mind?
Good, good.
What's on your mind tonight?
Oh boy. Let me.
All right, he's gonna try and fix his connection and try again. Anyways, if you guys want to join the chat, it's that easy. Click on the link in the video description. I will repaste it. Copy invite link. YOLO Ono. What's up, Dan? Join us, Dan. Live from the UK. YOLO Ono. He says, don't watch the Smurfs. I'm not planning on it, Dan. I did go look at seeing it a few times and couldn't bring myself to do it. Brandon, I'm trying to get you in here and I can't see your camera. I see you in the back room. It looks like you're frozen. You want to? Hello, Brandon. Hello, Brandon.
Sir, I'm here. Can you hear me? Yes, sir. I'm here. Can you hear me?
Yeah, I can hear you. We just can't see you. Go ahead. What's on your mind? What's on your mind, Brandon?
I don't know what's going on with my internet connection tonight, but
that's fine. We can hear you. What topics are of interest to you tonight?
well, before I get into that, I just want to take this time and thank you. I've been following you for some time now, and you have helped me so much. So from the bottom of my heart, thank you so much for that.
I appreciate that. I usually get people complaining, not that many compliments. So it means a lot. Thank you. I'm glad a couple of y'all are finding some value. What tickers are you trading, Brandon? Are you doing value investing? Are you playing the retail stocks? Are you looking for momentum trades?
So I've always been a value investor. My biggest parts of my portfolio are Apple, JP Morgan, Visa. But I recently started dabbling into AMC, Riot blockchain, Riot platforms now.
Yeah.
So those two, I started trading a little.
All right. Riot's been. I'm going to pull up the chart here and look at it. I've been seeing a lot of buzz on Riot. Oh man, yeah, it had a good run up from $6 to 15, and then it got smacked last week or Friday, I guess, right?
Yeah.
I haven't been following the news. Was that just because Bitcoin's going down?
They bombed on their earnings.
Okay. Well, yeah, that happens from time to time.
I got in at 8 and sold at 14.
Okay. Well, you're doing it right. You had a plan and you took profits. I like it.
Yeah, I actually reached out to you once and I asked you to help me with the balance sheet, and you told me that the fair value was 838. So I did some DD and I was like, shit, I'll take a run at it.
And you made profits from $8 to $14. I mean, how long was that hold? It looks like, I'm guessing, what, about 2 months?
A little under 2 months.
Hey man, take that all day long. That's what I tell the folks in my Discord. You know, we don't need to hit home runs every week. If we can hit singles or doubles and do that every week or every month or two, all of a sudden you're getting market beating returns on at least a portion of your portfolio. And if you're a value investor, like you say, and the bulk of your portfolio is tracking blue chip stocks, you mentioned Apple, I think JP Morgan and Visa, all solid plays. And then you can juice your portfolio returns with some of these speculative and momentum stocks. Just have a good plan. And we got to unplug from all these people pushing ridiculous price targets. There's nothing wrong with taking a profit.
Absolutely. One quick question I have. I hear you mention fair value,
Yeah.
and I've been trying to calculate the fair value of the stock, and I've been doing research, but they have all these complex calculations that doesn't make any sense. So what is the easiest approach to calculating a fair value?
All right. So it is difficult, first of all. Yes. You have explained the problem 100% accurately. I don't know if you saw the GameStop video I put out about a week ago, which had a link to a free website that has a discounted cash flow tool on it for you guys to use. Did you see that video by chance?
Yes, it was just still complex to me.
It is complex, but that is one method in which you could compute a fair value for a stock, discounting future cash flows. Another way that you could do it that's even more simple, and this is where I always start right here. Look at, well, that's going to tell us more a price target than a fair value. But I start with the basics, Brandon. I'm looking at like, what are expectations for earnings over the next 12 months?
Okay.
All right. And then let's pick a company. Let's say Cinemark. And then what is the industry average PE ratio? And then we can compute the price target based on the next 12 months earnings. It's not really computing fair value, but it does give us a reality-based forecast for where the price is going to go. And almost all of these analysts that are predicting prices for Cinemark, like you see on the screen here, they are listening to management, looking at box office. The company is giving guidance for revenue and earnings, and they then compute annual earnings per share, $2.33 in 2026. And if we use a PE ratio, what is the PE ratio on Cinemark right now?
I think 25.
It's all the way down to 13.5 right now.
Oh, shit.
That's pretty low.
Yeah.
So if we take 233, multiply that times 13.5, 2.33 times 13.5, we get $31. So, and that's right in this range of what they're saying is their price target. I think Cinemark could do better than this. I had a $40 price target. I lowered it in my video to 36, I believe, but $40 would not surprise me. It's really hard for me to call right now in Cinemark because I need to see how the market digests them spending all this cash, but at the same time they're reducing their debt, so we'll have a better idea. And analysts have not updated their price target, so maybe we get an updated price target from the analyst in the next week or so for Cinemark. But that is one tool you can use, and same type of thing we could do for GameStop. Let's just do that one as a comparison. It's not,
Okay.
again, not a fair value comparison, but here's where we get into the debate. What is earnings for GameStop going to be a year from now? I don't think that the analysts are quite correct here. They have 73 cents.
Okay.
If we use a reasonable PE ratio, let's see, what is BBBY PE ratio? Or sorry, BBY, Best Buy PE ratio is 15.5. All right. So if we take 73 cents and multiply it times 15.5, we get $11. I mean, what's Michael Pachter's price target? 14. He's given you a little bit of extra for the value of the cash and the value of the Bitcoin holdings. Right.
Okay.
We don't even need to do a DCF to understand where he's getting his price target. Then you could argue, is he being too bearish on expectations? Is GameStop going to grow revenue? Are they going to grow profits? Are they going to grow margins? Is he being too bearish? Maybe. But that is, any of us that are guessing that, we're just speculating because we don't know. We don't know what's going to happen. It's okay to
Sure.
speculate. It's okay to speculate. It's okay to be optimistic. But you need to understand where price is coming from. And these people that are telling you $50, okay, show me your math of how you're arriving at that. They have no answer. Just I'm going to draw an arrow on the chart. That don't work. Don't work that way. So I would say it's important to do both. It's important to understand the where is the trajectory in terms of a price target for the next 12 months. Notice I did not talk about balance sheet. I did not talk about current ratio. I did not talk about price to sales ratio. Earnings. And once you kind of have that, then you can spend a little more time starting to study discounted cash flows. And there are some free tools out there, websites. I think I linked one about a month ago in another GameStop video. If you guys have not taken a finance or accounting class that covered DCF, then now's the time to start reading up, at least to, what's the word, conceptually understand what a DCF is. Because I got a lot of questions. Why didn't you include Bitcoin in your DCF? There's no cash flow from Bitcoin holdings, so you can't include that. Did you include all your cash, all the company's cash? Yes, we included all of the interest, and then we discounted the future value of it to present value. These are very, very, it is complex, I agree, but it is standard financial analysis that everybody on Wall Street is doing to tell you what they think the fair value of the stock is. That doesn't necessarily mean that it's a price target. A lot of stocks trade well above fair value because
True.
people are speculating on them. They have higher expectations. GameStop, case in point, trading well above fair value. That's fine. That's fine. But the other thing that understanding fair value helps you is knowing, as you just saw on Riot, when they miss, what happens, Brandon?
Tanked all the way down.
A massive red candle. When Tesla has bad news, because it's trading so high above fair value and the PE ratio is so high, what happens? It tanks.
All the time.
And so the higher things go above fair value or even a rational earnings-based price, we just got to have our heads screwed on straight. Either take profits into that or have a limit order in case bad news comes out so you can exit the play and rebuy cheaper. Nothing goes up forever.
Murphy's Law.
Except Berkshire Hathaway. But yeah, I wish I had a simple answer for you of how to calculate fair value, but understanding DCF is probably where I'd spend some time, were I you guys. And I'm not a finance professor, so maybe, I mean, is it worth it for me to make a video? No, nobody would watch it.
I would watch it.
I could explain it, but would anybody watch it? I mean, it's pretty dry stuff. In the GameStop video a week ago, I tried to break down in the tool. Here's what we're putting in for each one of these, but you need to go then understand, what is a discount rate? How does a discount rate tell us? What does it tell us, the discount rate that we pick? What does it tell us about any perceived risk? Like I might say the discount rate for GameStop is 11 or 12%. A GameStop bull might say, oh, you're full of shit. There's no risk in this play at all. Discount rate 5%. They're going to get a wildly different fair value answer than I am, because they're not analyzing risk to the company in the same way. That doesn't mean that they're wrong. It doesn't mean that I'm wrong. It means we have different expectations or different variables that we're inputting. Only time will tell who is correct. That is the whole thing about doing DCF. It's only as good as the inputs you put in. And what I tried to do, and I shared my GameStop analysis with you guys, was let's set aside all of the hype and the hopium and look at it realistically. You know, what kind of, how's the market looking at it? You want to be more optimistic? That is totally fine with me. Clearly, a lot of people are. It's trading well above fair value.
Gosh, yeah.
I wonder if there is a, I don't remember on some of these other websites, if there is a statistic where it's already computed. Let's, what is that other website that we use a lot? Market Chameleon. What's the one that has all the stats on it? It always slips my mind when I'm wanting to look it up.
Market Beat?
Not Market Beat. It's another data analysis tool. Profit ratios. You know, I talk a lot about ratios and understanding what buckets. You hear the GameStop people always talking about liquidity and solvency, but you don't ever hear them talking about the valuation ratios. They don't want to touch that. You don't hear them talking about profit ratios. They don't want to touch that. But there's a reason these are the first two buckets, because that's what drives price. Over here is what they want to talk about, leverage and ratio. Hey, it's great. We get it. That's not driving the price. That's just giving you comfort. Same with when you go to stock analysis and you look at the stats. Well, let's go to the ratios. Now let's go to stats. They bucketize it the same way. What do they start with? Valuation ratios. Do you see anything from the balance sheet in here? No.
You're breaking up.
Nothing from the balance sheet in the valuation ratios. Anywho, I was going to see if there was any DCF calculation over here on Market Chameleon. I don't see it. When
You there?
I can still hear you. I don't know if you can hear me. We still good?
Okay, you're back.
All right. If y'all think of the other website that I should be pulling up, let me know. Not Market Beat, not Yahoo Finance, not Chart Exchange. It's got way more stats even than Market Chameleon. And I can't think of the name of it off the top of my head. God dang it. Anyhow, what other questions you got, Brandon?
So I covered, so the biggest thing I wanted to know is how to calculate the fair value. The EPS, I know it has something to do with the amount of outstanding shares.
Yes.
So in essence, I mean, obviously there's a lot more to it, but the simple explanation is to calculate the EPS by the PE ratio of the industry.
That would be the preferred way to do it, I would say. Like I always hear the GameStop people say,
Okay.
well, look at Tesla's got a 200 PE ratio. That's what it should be for GameStop. If they can get it, why can't we? You're not Tesla. Tesla has a sky high sentiment and expectations of future profitability and business growth. That is not the market sentiment for GameStop. You can't just assign a Tesla PE ratio to GameStop because you want to, or because they're overvaluing Tesla. You have to, I think, stick with something in the sector that the company is in until the company gives you a reason to say it's no longer trading like a stock in this sector. It's no longer going to be valued like a stock in this sector. Like, for example, if GameStop had bought $4 billion worth of Bitcoin, maybe it would trade more like a MSTR, and we don't need to look at Bed Bath & Beyond. I mean, sorry, Best Buy. You know what I'm saying?
Gotcha.
They haven't, they're still brick and mortar. That's still that's what they are. They're brick and mortar with a bunch of cash. And hopefully they change that. Put that cash to use.
Oh boy, my connection again.
Mr. Premium says, what is the fair value of Palantir? That is a good question. I have not looked at Palantir recently because it was getting so sky high, but let's just look at the earnings and the PE ratio. I bet it's ridiculous, isn't it? Shout out to Maggie.
Hello?
Hopefully. Yeah, we still hear you, Brandon. Whoo-wee. Forward PE ratio of 249 for Palantir. Holy smokes.
My connection is really bad, so I'm going to disconnect, but I'm going to still be in the chat.
All right, Brandon, thank you for joining in.
Thank you so much.
Thank you.
If you can hear me, thank you very much for your help.
Guys,
thank you so much for everything you do, and I truly appreciate you.
Going forward. Now, there is 2 PE ratios. You probably already know this. The one based off of the trailing 12 months. And, you know, I typically look at the forward PE ratio as long as we're expecting that the company is going to be growing, because that gives you, the market's not looking at 637. They're looking at 249 because they have certain expectations about the next 12 months revenue and earnings. But 249 is still, wow. That means for every dollar of earnings, people are willing to pay $250. That is crazy. Wow. But it's been a fantastic stock. Look at that. Remember talking about this stock back in 2022? Maggie would ask me, Tony, do you think Palantir is ever going to go up? Buy and hold, Maggie. I hope you are sitting here with you counting your millions, Maggie. Brandon, thank you. I see your comment there. All right. Wow. 250. I mean, I have nothing bad to say about Palantir other than that's a sky high PE ratio. And were they ever to have a bad quarter or a bad year, you know, that could change really quickly. You guys know how it goes. But play the hot hand. I'm not going to try and talk you out of playing winners. Just have a plan and understand how it's valued so you can manage your risk or take some profits off as it makes sense. As long as it's a hot hand and as long as it's moving, let that baby ride. Woo! Palantir gets U.S. Army contract worth $10 billion. See, I mean, what's not to love here? What's not to love? This guy, Palantir, $10 billion upside rating downgrade. Come on. I said, what's not to love? He found something not to love, apparently. Earnings on Monday. Oh, that'll be a fun one to watch. Dan, you're not going to join us from the UK? What time is it? We're pushing up on 10 o'clock, and wifey will be home soon. Let's see what the chatter is up here on Twitter. Someone's asking, I made a comment about AMC's balance sheet being insolvent, and they're asking Grok, was AMC insolvent in 2019? That's a good question. Who is that? Joe, PE with Joe. How you doing, Joe? Let's see. Because I don't remember. I wasn't paying attention to AMC back in 2019, but let's take a quick looky-see, because they were paying a dividend at some point back around then, right? Dividend per share, 2020, 2019, 2018. Yep. All right. Were they insolvent is the question. Total assets, 13.9. We can go down here and look at shareholder equity. Total liability. No, they were not insolvent. Total assets greater than total liabilities. My premise that I was sharing with folks on Twitter today, X, if you prefer that, is that companies that have a upside down balance sheet have no business paying a dividend. AMC was not insolvent in 2018. They were not insolvent in 2019. Total assets were greater than total liabilities. So I would not have a complaint with them paying a dividend in either one of those years. When your balance sheet is upside down, like right now, total assets $8 billion, total liabilities 9.8. We're in the hole, negative $1.8 billion. I'd fucking, pardon my French, I'd slap a CFO in the face if he talks about wasting cash on a dividend instead of paying down debt. Look, you're getting crushed on all of your ratios. You go look at the liquidity and solvency ratios on AMC. They're horrible. And I don't say that to be bearish. The management team understands this perfectly. They know. That's why they're working to pay down the debt. They've done a fantastic job. Look at all this debt that's been paid off. Total liabilities, $13.13 billion down to 9.7. That's a massive reduction in liabilities. So they've done a phenomenal job. Still work to be done. As I said on X today, to the tune of $1.8 billion. If you want to see that number, you can look at shareholders' equity, negative 1.7. There's the exact math. Any extra cash should be fixing the balance sheet, not distributing cash to shareholders. Shareholders are going to risk bankruptcy until the balance sheet is fixed. That's just a fact. The market is going to short the fuck out of AMC as long as the balance sheet is insolvent. This is not a good situation. I'm not saying that to be negative. I'm saying that so that you understand what management's focus is. Their focus is repairing the balance sheet, as it should be. Net cash, negative $8 billion. Net cash per share, negative $18. Equity, negative $1.7 billion. Book value, negative $4. No, do not waste cash on a dividend. They can't, even if they wanted to. There's debt covenants that prevent it. Anybody talking about dividends, in my opinion, is spreading hopium that is only going to get you upset, get you depressed, get you angry, get you questioning management. Not because management's talking about a dividend. They're not. They're putting out documents that tell you in plain black and white, covenants prevent us from distributing a dividend. Go read the documents. July 1st, 2025. It's right there. Only these pumpers on social media are putting out this message. And that is a horrible message to be conveying to people, because you're going to give them expectations that are going to be dashed. It's not reality. Not right now. Maybe in a year, 2 years, 3 years. Hopefully one day. Not right now. Zachary says, what kind of debt reduction levels would remove the debt covenants? They would have to, I have not read all of the debt covenants to see if there is a, I read them to the point, Brandon, where, Zachary, to the point where I saw that it said dividends are not allowed. You could read further and see if there are conditions under which some covenants might be lifted. The company could also ask for permission to have the lender set aside a covenant. But if the lenders don't want cash going out the door to equity, they don't. They want that cash on the balance sheet to pay them. They're higher in the totem pole than us. They're in the driver's seat. They have that covenant there for a reason, to protect their investment, their billions of dollars, to ensure that cash is properly deployed to either grow the business through proper investments in IMAX and Dolby, or to pay down the debt or service the interest. What kind of debt reduction levels would remove the debt covenants? I would say the company needs to be, first of all, we need to talk about profitability again. They need to be profitable. You need to have positive free cash flow, ideally on an annual basis, not 1 quarter, not 2 quarters, on an annual basis. Profitability and positive free cash flow. Get a credit rating upgrade from Moody's and S&P. Then go refinance the debt. And maybe, if the gods are favorable, maybe you can get new debt signed that doesn't have covenants restricting dividends. As long as the existing debt is in place, I would never be talking to you guys about dividends. I think it's not helpful. It's not helpful to people's mental state to get them all excited about something that is extremely unlikely to happen based on company documents filed with the SEC, debt covenants. So let's focus on profitability. Let's focus on operating cash flow, free cash flow, positive. Those are good things to focus on. Once you have cash coming in, a lot of things start changing. Does that make sense, Zachary? Hopefully that's helpful. I'm certainly not trying to be negative. I want you all focused on things that matter, so that if you're in the trade, which that's fine with me if you are, I will be back in it soon enough. If you're in the trade, I want you to have your head screwed on straight, know what to expect, and not get upset when things are promised to you that don't happen. We've been through enough. We've seen enough of that. All right, ladies and gentlemen, let's take it out with the GameStop Up and to the Right song. Thank you for your time tonight. And I will be around this weekend. Maybe we'll get some other guests on for Sunday, depending on who I can round up. Zachary says, I want to see AMC in a place where they can negotiate interest payments at a lower rate. A credit rating upgrade is critical, Zachary. credit rating upgrade. And when I talk to people like Sparky, who are bond guys, he's not a hedge fund manager. He's I don't even know what company he works for, but it's not anybody up in New York or any of the bad guys. He's just a bond portfolio manager, I think, for some other public company or some government agency. The bond guys will tell you that when AMC's credit rating improves, they have a chance of getting better debt deal. So that's what we should be focused on. How do you get a credit rating upgrade? More optimism about box office, more optimism about, and I would say communication from management about positive net income and positive free cash flow. I think once you have all three of those things and the company delivers on it, then you start getting in territories where Moody's and S&P can say, you know what, they may still be upside down on the balance sheet, but things are looking better. The industry has turned the corner for the moment. Things are looking positive. We're going to bump them up one level. Get us out of junk bond status. Things start changing. Maybe you get a better interest rate. We can hope. We can hope, and we can go watch movies. Buy some popcorn. Zachary, no, the SEC filings do not show AMC's current credit rating. You can Google Moody's or S&P and then AMC credit rating. Look at both. I have a login to S&P where I can go read the detailed credit report. Basic finance stuff. They look at the box office, they look at revenue, they look at the debt deals, they look at the balance sheet, and then they run their little finance formulas, and with no emotion, no hype, no hopium, just basic financial analysis, they assign a risk level credit rating. When that risk level changes because everything's going better, box office, profits, free cash flow, they can decrease the risk level, improve the credit rating. So yeah, go check that on your own. Moody's, S&P 500, not S&P 500, S&P AMC credit rating. And, you know, maybe if you want to set up your own login, you can go read the reports yourself. It's good stuff. It's good. A lot of people get mad about it, but that's the system. Those are the people that create the credit ratings, and those are how interest rates get assigned. It just is what it is. You like it or not like it. That's what we got. And I can tell you exactly what will make it better. Better box office, profits, free cash flow. That's my focus for AMC. My hope, my wish. And everybody can have all your theories about the synthetics and all of that. That's cool too. I'm not focused on that stuff. If it happens, beautiful. I'm not ever going to try and talk you out of whatever you think. I'm not that guy. I'm not going to make fun of you for whatever you think. I'm not that guy either. But I'm not going to talk about it. I'm going to talk about what I think matters right now. Fundamentals. Love it or hate it. That's what I think matters. Guys, thank you for your time tonight. Hope you got some value out of this. We will see ya on the next one.
Up and to the right. Up and to the right. Up and to the right.
Hello, millionaires. Short screenplays, where fortunes flip. GameStop's journey, an epic trip. From humble roofs to the moon we fly. A company's dream will amplify. Ready warriors, keyboards in hand. With their eyes on the prize, they took a stand. No one's selling, we're here to fight. How does it go? Up and to the right. Up and to the right, we're in for the ride. It stops on the right. day and night. Together we'll soar. Molasses in sight. Up and to the right, we're in for the ride. Can't stop on the rise, it can't be denied. Up and to the right, through the day and night. Together we'll soar. Molasses in sight. Hedge funds trembling, Kenny's in shock. GameStop stock, you'll never stop. From diamond hands to rocket ships, we're not selling, we buy every dip. Up and to the right, we're in for the ride. Up and to the right, it can't be denied. Up and to the right, through the day and night. Up and to the right, molasses in sight. Billions in cash on the balance sheet. We will win even if they cheat. Dilute us more, we don't care. Book value grows with every share. The doubters say it can't be done, but the retail army we've already won. With every share we'll never stop. Investors say we love the stock. Up and to the right, we're in for the ride. It stops on the rise, it can't be denied. Up and to the right, through the day and night. Together we'll soar. Up and to the right. Up and to the right. We're in for the ride. Together we'll soar. Up and to the right.
Surprise!
We're gonna win.